Canada's financial institutions and credit systems can intentionally target newcomers with aggressive credit marketing, knowing they have a limited understanding of their new country and are navigating an unfamiliar financial system. Is that true? What are the implications? Ted is here. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Okay, let's start with introductions. I'm Doug Hoyes. You're Ted Michaelis.
I am.
We are the co-founders of the unoriginally named Hoyes Michaelis and Associates, Inc., licensed insolvency trustees here in Ontario. So, first of all, do you agree with what I said in the intro that lenders intentionally target newcomers to Canada?
Well, of course they do. It's a growing segment, and they're competing with all of their competitors for that segment.
Yeah, and Canadians, and this is a good question for the listener. The bank you're at now, how long have you been at that bank?
Did you get your first account when you were a teenager?
Exactly.
And if nothing's gone wrong, you've probably stayed with that bank all the way through university.
That's right. I mean, there are some things we Canadians don't change. Bank accounts, toothpaste brand.
Who they vote for? No, that changes all the time.
Who they vote for. The cereal you eat in the morning. Like, there's some things we just...
Creatures of habit.
Creatures of habit. Now... So we're going to talk about this whole immigrant thing. Now, you are an immigrant.
I am an immigrant.
And you immigrated here, what was it, 60 years ago or something like that?
Almost, yes. June of 1966.
So we are coming up, I think this episode airs sometimes toward the end of June, so we're coming up on your immigration anniversary. So you are uniquely qualified to speak about something that happened to you 60 years ago.
Certainly. I'm an old white guy. It's going to comment on immigration in Canada in the 2025.
So the reason we wanted to talk about this, I guess a couple of reasons. Number one, we have a lot of clients.
Significant number who are, I've been in the country for 5 years or 6 years or 7 years, and now they're getting into difficulties. We're going to talk about that. And the other reason is, as I said, I guess maybe you were the one who said it, we tend to stick with our banks. So if I'm a bank and I want to get a new customer, I got to tap into a new market. Immigrants are the perfect new market. Yeah, think back. When you first went to university, probably in your orientation package, there was an application form where you could check and pick how many different credit cards.
Yep.
And they did that because brand loyalty in Canada is supreme.
Yep. You want to get them young. So, yeah, and in my case, when I was a kid, I banked at the bank my parents banked at.
Right.
And the only reason I switched was when I got married, my wife had a different bank. And of course, she's the smart one. So we went with her bank. And that's pretty much it. I think I've been with the same bank now for, 30 years. So the banks have dedicated programs. They want to get the newcomer a credit card, a loan, a mortgage, whatever. Now, I would assume that you're coming to Canada from your old country for a better life. I don't think there are a whole lot of billionaires who are emigrating to Canada.
Don't know.
Maybe there are. I don't know.
Or maybe if they like skiing.
Maybe, possibly. Or poutine. I don't know.
Right.
So why would banks target what would appear to be a relatively lower income segment of the market and probably a lower wealth segment of the market?
Well, banks are driven just like everybody else, a profit motive. And if you're in a lower income segment, probably you're paying more service fees, higher interest.
Money. It all comes down to money. Money and profit, money and profit. Okay. So that kind of makes sense. And apparently, according to my show notes here, 60% of newcomers are offered credit products within 90 days of arrival, which is kind of exactly what you just said about when you start university. Yep. Boom, here you go.
We got to get you on the bus.
It's the first thing that we go after you for. So do you think that these offers are helpful, or do you think these are predatory?
It depends on who you are. So the most places in the world really are not as credit intense as we are here in North America. In fact, Canada's not as credit intense as they are south of the border. But if you go to, even most of Europe still, credit cards are not necessarily the norm. And certainly Asia, they're not the norm. And so suddenly you get to a new country where the views about money are completely different than what you're used to. And so you're told that, your credit report is important, your rating is important. The only way you can get a credit rating is if you get credit. So you got to get on the bus.
And I have no idea if what you said is true because I've never been to Asia. So people can put a note in the comments on YouTube if we're completely wrong in what we're saying.
Right.
The other factor is how can you buy a house in Canada without debt? How can you buy a car without debt?
Right.
Like how many people walk in? I don't know, what does a car cost today? $30,000.
So you want to refer people back to our Debticize video because
yes,
quite
indeed.
frankly, it's pretty educational.
And that's where we talk about all that stuff. And one of the points of that documentary is that we have become debticized. You can't do anything without debt.
And everything got more expensive because you can finance it now.
Yeah.
So if you only had $10,000 to buy a car and that's all you could ever pay, cars would be a lot less expensive. But now you can finance it over 7 or 10 years, and so now it could be $100,000.
It's unbelievable, but true. So we're talking about different cultures, like you said. Some cultures, it's we're debt averse. That's right. That's not a thing.
Well, it's just not available. So they're called, you pay cash, and if you don't have enough cash, you save the money to then when you can pay cash. And
I suspect that there is a difference between how we treat different institutions in different countries. So we've got the big 5 Canadian banks who have all been around for 150 years.
Right.
And
they're incredibly stable. You're not worried about them. There's not going to be a run on the CIBC.
Let's hope that is not the viral clip where Ted predicts a run on a certain bank. And if you look at the history of those banks, I believe, again, I didn't do any research for this show, but I believe that they have paid dividends consistently for 100 years.
Right.
So it's like, I don't have to worry about those banks not being here
bank
tomorrow.
Stock, you're going to get somewhere between 3 and 4%, and then maybe the stock itself is going to mature.
So it's a different world here. I wouldn't say, I don't know, do we trust banks? I guess so. We trust that if I put my money in there, I can get it out.
Their advertising is that they're your friends. They are not, but we believe that the bank will be there tomorrow.
Yes, and that may not be the case in other jurisdictions. Let's put it that way. So, Okay, so let's take a look at this from the point of view of the newcomer. Obviously, they faced all the same challenges that someone like me who's been living in Canada since I was born face. You got incomes aren't as high as we'd like them to be. Expenses are high. But I've got a list here of newcomer specific financial challenges. So I'm going to throw them out and you give me your thoughts. And again, as with all podcasts, Ted got to see the script 45 seconds before we pushed the record button. So these are all his unfiltered reactions. So is it true that a newcomer is navigating a new system without clear education or support? And is that any different than a Canadian?
Well, so think about it. We don't really educate our children properly. Financial literacy is not a great strength in North America because too many people make too much money on the folks that don't understand it. But again, we are much more credit receptive here, credit intense. Our culture is based on that, whereas most parts of the world, it's still a cash economy. And so you're not familiar with what the heck is going on.
Yeah, and I agree with you that financial literacy education is not really a big thing here.
It's not a forte for anyone anywhere, by the way.
Right. And I know high schools now have some course that has a couple of things in it and whatnot, but the decks are stacked against you. The bank wants to lend you money.
Right.
The car lenders, the real estate industry, everybody wants to lend you money. And
everybody wants to sell you something.
Yeah.
Right. And so the people that want to sell you something are in cahoots with the people that will finance the purchase.
Right.
So it's not that the banks don't necessarily want to lend you. Well, they do. They want to make money. That's what they want to do.
Yeah. And so you're right. Everybody's kind of on the same page here. Right. If we want to sell you something, we need to lend you the money to do it because you don't have the money to do it.
Right.
And that's just kind of how the system works. And I guess you could say that, you and I are doing this podcast called Debt Free in 30, like and subscribe. Obviously, we're selling something too.
Right.
It's not like we're pure here and just doing this for the good of the world.
Right. Everybody's got a bias.
Yes, we have a solution to debt problems, and that's kind of what we're here for. And so I guess the point is you got to take everything everybody says with a grain of salt.
Now, as we say in every episode, you're the person who's most interested in your financial life.
Yeah. So you should probably be paying attention to it. Okay, so I guess I'm going to put an X beside that one because I think when it comes to education, probably it doesn't matter where you come from. We're doing a bad job. Newcomer-specific financial challenges. Well, obviously, language barriers
certainly can be.
Yeah, that would be an obvious one.
Right.
Which is why the different banks, and you can see it in their ads. Oh, we've got a special department for someone coming from this country, that country, whatever. They certainly cater to that. There is a pressure to catch up financially or send remittances home. Is that something you ever see?
Sure. Just about, again, this is more predominantly probably Asian or maybe African, but they are sending money back to their home country, so to speak, because things are not good there. And so you come to Canada for a better life, you share that better life with the people you left behind.
Yeah, you wouldn't come here for a worse life. And I've got lots of clients who I'm looking at their budget and I'm going, well, what's this $400? Oh, I send that back to my mother every month.
Right.
And I'm thinking, well, $400, that's a big number in my home country. That's, that pays her rent or whatever. So, okay, I kind of understand why you'd be doing that. There's also, I think, some misunderstandings. And this is, I do hear this from some native Canadians, but it's more prevalent from people who were not born here. Will I go to jail if I can't repay a loan? They have this in their mind that it's a pretty serious thing.
That's because in their home countries and much of the world, you don't pay a loan, you can be. I mean, it wasn't, let's say 150 years ago, debtor prisons, work camps, all that sort of stuff. Those existed. They don't exist anymore.
I think that was more in England. I don't know if we had that in Canada. I wasn't here 150 years ago. But yes, I was not. I was not. Almost, but not quite. So yes, that's obviously a difference. The other reason it's hard to get a loan when you come here is you don't have a credit history here.
Right. And our system is based on what's the past performance look like. Well, if you got no past performance, how are you going to compete?
That's how the computer does the...
And there are no international treaties on debt collection. So, I mean, we have this, we tell this to people as well. They say that, well, I'm going to move to the United States. Well, remember, your credit report isn't going with you. Or you've moved from another country. It doesn't come with you here.
Yep. And we'll talk a little bit about that. There are some things, we talk about it now. There are some things changing on that front where they're trying to link the different credit reports in the different countries. But there's a huge challenge. If you've come here from India, there's 1 billion people in India. How do you match up the credit here to potentially 1 billion people there? There's no common identifier. They don't have a Canadian social insurance number in a different country or a Canadian address or something like that.
Some kind of unique identifier.
So that, they're working on it, but it's not quite a thing. Now, let's talk about aggressive credit offers because we've touched on this twice already.
Yep.
Banks have specific new to Canada programs that push credit products early, often within weeks of landing. Yeah, I think we both totally agree with that. That's certainly a thing.
Mm-hmm.
And some people assume that that's the only way to build credit or succeed financially. Well, I guess, like you said, borrowing is the only way to build credit. Yeah. But is that the only way to succeed financially?
Right. Well, in fact, it's probably the opposite way to succeed financially. If you're incurring debt before you're really prepared to deal with it, or you properly understand what repaying it's going to mean, then it's probably not a good thing.
So your advice to a new immigrant would be the same as your advice to everybody, which is, you should focus on trying to save some money.
Right.
Because if you can do that, you don't have to worry about debt. You don't have to worry about high interest, anything like that.
The irony of all that, of course, is if we all did that, there'd be a recession.
Yes.
Because we're built on spending every dollar that you're going to make tomorrow today.
Right. And as we've said many times on this show, we are here to give advice to the person who's watching us.
To the individual.
The individual. We're not here to advise the government.
Right.
The Prime Minister has never called me. I don't know if they've ever called you or not, but has never called me. Nobody in government ever calls me and asks what I think they should do. No corporate, nobody's asking us, right?
Yep.
So, yes, you are absolutely right. If we were to eliminate debt tomorrow, the system would crash, but I don't think that's going to happen.
Right.
And so, again, we focus on the individual. Here's what you need to do, and don't worry about the effect on the rest of the economy. That's not what worries. Mm-hmm. Now, there's another thing that is, I think, unique to the immigrant experience, and that is, for lack of a better term, the role of community helpers.
Oh, right. Yeah.
So, and you've run into this, right? So, what am I talking about?
One of the things, I guess, that's highest risk for immigrants is they don't know who to trust. Mm-hmm. And so the assumption is someone that comes from your culture, that speaks your language, will probably give you good advice. And that's not necessarily true. Mm-hmm. They're probably selling you something, and that's their way to get ahead. Doesn't mean that you're going to get ahead.
Yeah, and we don't have that same sort of thing in the native-born population, although, maybe we do. Maybe it used to be that you went and talked to your union rep.
Well, you talk to your pastor.
Yeah, your religious leader, or I guess your barber.
Mm-hmm.
I mean, if the wealthy barber is your barber, then I guess
one day, Douglas, and that day may never come.
We're going to help you. We're going to help you. Yeah. And so, okay, how do I know if I am a new immigrant and, that guy over there is the guy that everybody in the community goes to when they need to get a mortgage, they need a loan, whatever. how do I know if that guy's legit or is exploiting me, or like, is there any way to really know for sure?
And I don't know that there is. I mean, you got to rely on the people that came before you to point you in the right direction, and hopefully that your community comes together and actually is helpful.
Yeah, because I can certainly see a definite role for that person. I mean, I'm new to the country. My language skills may not be great. I don't understand how all this works. Like, should I go to a bank? Should I go to a credit union? Should I do this? Should I do that? So I guess, as with all things in life, you want to like do some thinking and get a second opinion.
Sure.
So are there two guys in the community that are also doing this sort of thing? But yeah, I don't have a good answer for that, other than I guess you got to think about it. Now, we did hit on this whole global credit histories thing.
We did.
So let's revisit that again. So there are significant efforts being made to bring credit histories from other countries into Canada.
But the basic problem with this is, again, we are the most credit intense continent, North America. Between the Canadians and the Americans, we use more credit than anyone else in the world. So no one else is going to have a system similar to ours because they haven't needed it yet.
And so what are the pros and cons of that? I mean, obviously the pros are, well, if I'm new to the country, I have no credit history, but I did have a credit history somewhere else. I guess that helps give me a leg up.
It should, yeah.
But the cons are, what if my credit history was bad in the other country?
Right. Or non-existent.
And so now I'm coming here and
I got nothing.
Yeah. So you and I, we already had this discussion today about credit reports here in Canada. And I believe I made the comment that a lot of the ones I see, there's errors on them.
Right.
And that's...
The world may figure it out. We're not big fans of the credit reporting system. I don't know what could make it particularly better, but it's flawed. Let's just say that.
And I think we did a podcast, or I did a video on this recently where I referred to it as a necessary evil.
Right.
So in the old days, again, we're both in our 60s, so we remember what, the Great Depression was like or whatever. You used to go to the bank.
Our Great Depression was in the 1980s.
There you go, yeah. Well, 2008 was kind of the bad time then, too. You used to go to the bank, and the bank manager would go, oh, yes, I know your father, I know your mother, we go to the same church.
I know where you're working, all that stuff.
So I can, on that basis, evaluate whether I should give you a loan. Whereas now, we go on our phones, we click a few buttons, and the app figures out from our credit report where we're at.
Does an algorithm and says, yes, we'll give you money and this is what it'll cost.
Or no, we won't. And so any error in your credit report screws up your ability to get credit or increases the cost of doing that.
Right.
And the reason there are so many errors in credit reports is the credit reporting agencies, Equifax and TransUnion, really don't have a whole lot of incentive to make sure your report is perfect.
They don't have the ability anyway. I mean, they report what they are told to report by their members. That's what the members are paying them to do. So if who did I pick on earlier? CIBC? Let's pick on somebody else. So if RBC sends a note to Equifax saying you missed your last 3 payments, okay, then that's what the credit reporting
report.
That's right, because that's all they know.
So I'm guessing neither RBC or CIBC will be sponsors of this
They
show.
haven't joined us by now. I'm figuring they're not going to.
Yes, we're almost at the end of season number 10 with no sponsors yet. So... Yeah, and I guess I'm of two minds of that. You're right. I mean, I'm the reporting agency. I take all the information, I put it on the report.
Right.
How can I verify what you're telling me is true? I mean, if you tell me the guy's missed 3 payments, like there's no independent source I can look at for that. The flip side is, I guess, the onus needs to be on the person reporting.
Well, the issue is that there has to be some accountability somewhere, and there really isn't.
Yeah, and we spend a lot of time with our clients going through their credit reports and showing them how to file a dispute.
Right.
We cannot do that. We don't have access to the credit bureau. That's just not how the rules work. There's privacy considerations and so on. When someone comes in to see us, the first thing we say to them is, hi, how you doing? And then the second thing is, get a copy of your credit report. And we are strong believers in getting it directly from Equifax and TransUnion.
Right.
Not Borrowell, Mogo, Credit Karma, ClearScore,
anybody buying it,
et cetera, because you cannot file a dispute with one of those people.
Right.
So, and we're not talking about the pay $20 a month thing. We're talking set up the account, and then you can actually go in and, that one's reporting wrong. I can upload the appropriate documents, file a dispute or whatever. That's a lot of work.
Right.
But what are you going to do? Like that's the only way to do it. I mean, you mentioned accountability. So if there was an error and I put the dispute in, how can you hold a bank accountable? There really is no way to do it, is there?
Well, and the risk is that the dispute gets corrected, and next month they report it wrong again, and you start the process over.
And you're back to square one. So, I don't have a solution to it either. The point is, I guess, that with all those problems we have here in Canada, you're just multiplying them when you bring in stuff from other countries.
Right.
Because now you brought in something that's an error. It's hard to correct a Canadian thing. How do I correct something from across the pond?
Well, and what is a good credit history in Europe or Africa or Asia as compared to, we know what it is here because we report with such frequency. But again, the rest of the world isn't doing what we're doing.
Yeah. Are they using exactly the same system where this percentage is based on history and this percentage?
Right.
No. I mean, it's presumably it's something different. So, okay. So let's just flip over to practical advice here then.
Okay.
I think we've hammered the credit reporting agencies enough. So just off the top of your head, because there's nothing on the script here, so you're going to have to just what is your practical advice for somebody who is new to Canada and they're looking to get credit? What would be the things that pop into your head?
Well, so don't necessarily take the first offer that comes your way. There should be enough different alternatives out there that you can shop around. You can read the fine print and you can decide what makes the most sense. There is no way to build a credit history in Canada without having access to credit. So you're going to have to get something. I would normally suggest, if you're new to Canada, a low-limit credit card or maybe even a secured credit card if they won't give you one. And we've done programs on those as well, so we don't need to talk about them here much.
Yes, and you're right. And we know from experience, it's not that hard to get credit.
Right.
When you're a new Canadian or an 18-year-old Canadian for that matter. So yes, you want to start off. Okay, so you go and you get a card that has a $300 limit or something. So now there is something showing up on your credit report.
Well, and so now you've got to make sure you understand they didn't just give you $300. They allowed you to spend up to $300, which they expect you to repay every month. So one of the common mistakes that immigrants make is that they get a credit card with a $5,000 limit, and they think somebody's just giving them $5,000. That's just not how it works.
I've seen Canadians make the same mistake.
Exactly. Anyway.
Yeah.
So credit card is supposed to be a tool. It's a convenience item, so you don't have to carry cash. And thanks to that little, pandemic thing we all had, it's a much more essential tool than it used to be. But still, use the card every month, pay off the balance. So don't use it to make purchases as opposed to a form of financing. Use that as a convenience instead of carrying cash. You have to understand the difference between those two things.
And that's exactly the same advice you would give everybody.
To anyone.
Like there's no difference. It's exactly
got nothing to do with immigrants. That's anyone. Credit cards are not a different form of borrowing. They're a convenience, so you don't have to carry cash.
Right. We obviously think of them as a way to borrow because that's what they are, but it should be a replacement for cash, not a way to borrow. And if you can get that in your head, then you got a fighting chance.
Yeah, you're halfway to winning the game.
Now, of course, I understand that the reason I have to use my credit card is my income is not high enough to cover my expenses, and that's, of course, a whole different story. So, okay, so somebody comes in to see you, and I had this exact scenario yesterday.
Yeah.
I've been in Canada now for 2, 3, 4 years, and I have $40,000 worth of credit card debt, 5 different credit cards. I've also got a couple of payday loans. And I can't pay them back.
Right.
Because I thought I was going to be able to use the skills that I had in the other country here, but apparently they don't transfer. And so now I'm an Uber driver. I'm doing a job that I'm not making a huge amount of money on. So what is your advice? And I'll tell you the first thing that always pops into my head, and you tell me if this is the wrong way to start. I mean, obviously I'm going to go through the same process I go through with everybody. But the first thing that pops into my head is, okay, so are you planning to stay in Canada? Why would I say that?
Well, there are no international treaties on debt collection. So if you're not planning on staying in Canada, this is not as big a problem as you might think it is.
Why not?
Well, because if you leave the country, there's not a hell of a lot they can do about it.
Go,
now, if you come back, it'll be waiting for you.
Right. And that's exactly what I say. So, okay, are you planning to stay? Like, do you have your permanent residence? Do you have your citizenship? Like, what's going on? And what a lot of new Canadians say to me is, you know what? I thought it was going to be different here because I was told that I'd have no problem getting a good job. I'd be able to, buy a house, whatever. And I get here and I find out that is not the case.
And they didn't tell you about the snow.
No. Yeah, I didn't think it was going to be this bad. And I think people who came to this country, well, like you 60 years ago, 65, whatever it was, or, like my grandfather who came here in 1904 or whatever, it was different because you didn't need access to a whole lot of credit. There were, lots of jobs.
It was free credit. Yep.
Yeah. And so I started out doing some menial job. I shouldn't say menial, some job where I'm not making a lot of money. But if I do that, I can save a couple of bucks. I can eventually buy a house. I can get back on the ladder, so that by the second generation, things are a lot different. Now it's like, well, we're in a recession. I know we're not supposed to say we're in a recession because the government has not officially said that, but we're in a recession. If I can't buy a house to get ahead because house prices are going down,
right,
and I can't afford it anyways. So maybe this was not quite what I signed up for. Maybe the answer is I either go back to my home country or I go to a different country.
Maybe.
So if I have $40,000 worth of debt in my example, and it's all credit cards, and I go back to another country, even if I just go across the border to the U.S., there's pretty much nothing anyone can do to me.
Pretty much.
There you go. It's pretty much that simple. Obviously, they can still call you. They can still send you letters.
If they can find you.
If they can find you. I don't know how they're going to do that. I've had lots of clients who go to the U.S. and, okay, the big bank may figure out where they are, and maybe they'll even try to sue them in a U.S. court, but that's very difficult.
Right.
And that's the U.S. That's not every other country in the world.
Yep.
So one plausible answer is you just do nothing. If you're not coming back.
Right.
Now, if I might come back, that's not a great idea.
No, if you might come back, then you probably have to deal with this. And there are different ways to do it. I mean, the most common one these days is probably a consumer proposal. So you can't afford to pay back the $40,000 that you've been talking about, but you can't afford to pay back 12 or 15 of it. Okay, we can probably do a deal that'll work out.
And so the first question is, do you plan to stay here long term? And are you employed and have wages that could be garnished? Okay, then let's talk about a consumer proposal to deal with that. The other option, of course, is a bankruptcy. If you can't afford a consumer proposal, if it doesn't work, that's an option.
Yeah, there's some immigration restrictions on bankruptcy, so we're certainly going to discuss it with you. But it's not going to be the first thing we suggest.
Yeah, and I think that's a critical point because, and again, I'm going to oversimplify this. I'll put a link in the show notes to an article we've written that goes into it more detail. The simple version, and again, I'm oversimplifying, but you cannot sponsor someone to immigrate to Canada while you are an undischarged bankrupt.
Right.
Because the rule is if you're sponsoring someone, you have to say, yep, if they can't, pay, then I'm going to cover for them. Again, I'm oversimplifying, but that's the gist of it.
Right.
So if you're bankrupt, well, you probably can't cover for someone else. Right. So if you came here and the plan is I'm going to bring my mother over, I'm going to bring my spouse over, something like that, if you're bankrupt, pretty much can't do that until the bankruptcy ends.
Right.
So that would be a difference between a new immigrant and a Canadian. Well, if I'm not sponsoring anything, I don't have to worry about it. So, okay, so question number one, are you staying? If not, don't worry about it. And even if you're going to leave and maybe I'll come back in a year or two, fine. Then you could just deal with it when you come back.
Right.
If they sue you, who cares? If you're going to be sticking around, a consumer proposal is probably your best option. Although, again, you want to be very careful with the whole immigration thing.
Right.
Because even though the forms are very specific about bankruptcy, a consumer proposal may end up having negative repercussions as well. The bankruptcy only works if I don't have to worry about any immigration things. Other than that, it's exactly the same as what we tell every other Canadian.
Right.
You gotta deal with the issues and do it from there. So, okay. So I think that pretty much covers it. And my concluding comment is most of the solutions for new immigrants are exactly the same as for people born in Canada.
Well, they are, because the system is designed for if you have a debt problem, there are a limited number of ways to deal with it.
So talk to a licensed insolvency trustee, determine your options, and be very clear when you're talking to an LIT that, I'm new to Canada. I maybe have some immigration issues, whatever. And that way you're not blindsided. Okay. So today we talked about immigrants in debt. Next week is going to be an interesting one. We're going to talk about how to help your parents when they have debt. That's interesting. or when they want you to co-sign for them. I'm pretty sure you have some opinions on that.
Right.
So we will talk about that next week. That's our show for today. Please like, subscribe, notification bell. You know the whole routine. Until next week, I'm Doug Hoyes. That was Debt Free in 30.